even if you have 100 million under money market fund, believe you me, that money will be decided on who will benefit from by the court of law.
Hi everyone, I hope this video finds you well. My name is Martin. In case you are here for the first time, na sisi ni watu wa insurance. We normally do reviews and also civic education on insurance. So if you are here for the first time and you have a question touching on insurance, leave a comment in the comment section. So anyway, in today's conversation, we want to look or to compare for those people who, okay, let me put it this way. There are those people who normally have an issue with education policies. Wanasemaga they don't have good value ama they don't give good returns. For those people who look at investment, how much you are getting out of your investments. So wanasemaga education policy does not give enough value and they normally go for money market fund. So leo tunataka kuangalia, would you consider a money market fund or an education policy? So yes, that is a conversation we want to have. So karibu sana Bwana Moi.
Thank you Martin.
Tuangalie numbers.
Yes, wacha tuangalie in terms of numbers.
Yes.
A majority of our people think that we just have one type of education plan. But what I can confirm today is that we have so many categories of education plans. Some are more of hybrid, and I want to use both numbers and also use something different. That is, in the event you're no longer there, what really happens to your money under money market fund, yeah, and what happens to the money under your education plan. You know, you may avoid that conversation. Unasema wacha tusiongee mambo na kifo, but this is the fact. The moment you come in this earth, there's one certain thing that at one point you will die, and sometimes it comes prematurely, yeah. But I don't want to take too much time on that area, because that is not our target. Our target is for those people who want to have both. Yeah, you want some kind of guarantee, at the same time you want interest. So we have these two. Let me compare this. Now we have our MMF here, money market fund, and we have our education plan. So when you talk of money market fund, the sweetest thing about money market fund is, number one, it's open, meaning that you can deposit money today, and if you want that money in the next couple of weeks, you can easily access, yeah. At the same time, money market fund requires very small amount of money, from as low as 100 bob, yeah. At the same time, it does not require you to consistently put money on monthly basis. So even if you break your money, you are guaranteed it's 100% there. So no monthly deposit, yeah. That is another beautiful thing. Again, your money market fund guarantees what we call capital preservation, yeah, capital preservation, which means that if you put your money today, in the next 1 year, whatever amount you injected from your pocket is 100% preserved, right? And again, money market fund incorporates something that is very powerful, something called compounding, yeah. It has what we call daily compounding, such that if, for example, you put 100,000 today, yeah, at the end of the day, an interest rate will be declared by this institution that does money market fund, and every day whatever amount is earned, it also gets to earn the following day. Or rather, what I mean is, if for example you earned yesterday 30 bob, So the following day, your 30 bob will also earn. That is something that is quite powerful on money market fund. And the average interest rate in the industry today is between 8% to about 11%. This is per annum. Now, with that in mind, I know you are thinking, why is it so sweet? And I'm not telling you the other side. Money markets fund has also the other side of it. And what I mean is, money market fund has what we call a withholding tax on whatever amount you earn. So if you earn 10 bob, 1 shilling 50 cent is not yours. Yours is 8 bob, and or rather, let us take a simple scenario where you have earned 100 bob. If you earn 100 bob, what it means is 15 bob does not belong to you, it belongs to the government, while 5 bob belongs to you. So that is 15% of withholding tax. And we have something else, is that money market fund, in our form, application form, it has what we call, you are asked to fill in something called the next of kin. Yeah, this means that in the event of, God forbid, death of the client, the money first of all will have to go to or through probate, or what you call the court process, so that the court decides who takes this money. Yeah, so that is another disadvantage about the money market. Even if you have 100 million under money market fund, believe you me, that money will be decided on who will benefit from by the court of law. So when we talk of education, this is something that is important. Yeah, and I want to do it here so that you can compare it head to head. So first of all is that education is a fixed plan, meaning that the moment you input money here, no matter what, you cannot get back into this pocket to withdraw some, not unless you have really a very key emergency that would require possibly for you to surrender it. So again, for the minimum amount you can put here depends on two scenarios. One is on how old is your kid, and secondly, what you prefer as a client. So on a monthly, so what we've said is that money market fund, you need no monthly deposits. So the education plans that are currently there has that extension that you don't necessarily need to inject money on a monthly basis. You can actually do a lump sum one-off, and we shall meet you at the point of maturity. On capital preservation, your education plan also has the same feature as in the money market fund, meaning that whatever you inject in this, whether you deposit it once, whether you do continuously, whatever amount you have injected under this education plan, it preserves your money 100%. On compounding, the education plan of today is very different from the conventional education endowment. So what you'll find is that today's plans actually are not really like education. They are more of hybrid money market fund. So what you will find is here, this education plan gives you around 12.5%. This is per annum, while money market fund is giving you a 10%. On withholding tax on education plan, there is no withholding tax, meaning that you'll be able to retain 100% of your capital and 100% of your interest. So withholding tax is 0. Then on education plan, what you have on that application form is not actually the next of kin. It has two options. One, you have the option of putting a beneficiary, and number two, you have the option of putting trust. What it means is that in the event of death, the money goes straight to the appointed beneficiary. That money do not have to go through the court process, so that your beneficiary can get the money. Alternatively, because we have seen this a lot, sometimes while you are putting beneficiary on your education plan, you choose someone who you are not very immediate related. For example, you could be having your spouse and children, yeah, and you don't want to put your spouse because you think if your spouse discovers that you have an insurance, they may harm you, because that is the assumption by many of us. So you opt to put the name of your brother or your parent. So this is the risk, and this is what I want to caution you. While choosing beneficiary, you need to be very keen, because we are seeing these days that the moment you are no longer there, and possibly you had put either your brother or sister as your beneficiary, they don't really care whether you have a family, and they are going to the extent hata kwa hiyo nyumba yako wanafagia what you have possibly put furnitures nini, and yet you could be having small children. So what we advise is, instead of putting your beneficiary as possibly your brothers and sister, you can set up something that is very powerful, that takes your instructions so seriously, yeah, because there is no one point we shall go to court. What we advise you to do is to instead choose a trust. Choose trust as your ultimate beneficiary, because this trust they contains instruction that this money is specifically for education, for medical cover, or for charity, so that in the event you're no longer there, the money can strictly go to school. So the school will just be issuing what we call the fee structure, and we pay. And then the remainder, after your child is done with the education, we, or the institution, the corporate trustee, gives your child the lump sum amount to start off life. So that is basically the major difference. But in terms of numbers, what are we likely to get? For example, if you choose to put, let's say, how much? Let's say you choose to put, so assuming we have this person who wants to be putting something on the money market fund, and the money market fund to act as an education plan, what would be the difference? So if you are to put 5,000 every month, and every month you are depositing the same amount of money for the next 10 years, because money market currently is giving between 8 to around 11%, and let us be conservative a bit. We say that our money market fund will be giving us, let's say, 9%. Yeah, I know you may have a contrary opinion, but the market is changing downward because of how the government is behaving, or we can even say 10%. Money market usually has what we call daily compounding. So by the time it is possibly maturing, or your child is joining Form 1 after 10 years, the much you will have put is 600,005 shillings. The interest rate is 443,000. So you'll have approximately $1 million. But this is the point. On the interest bit, you'll have to pay tax of 15%. So 15% of 443, that leaves us with a substantial amount going to the government. Alternatively, you could also choose to have an education plan that is a hybrid, that is neither a money market fund or an endowment plan, because we know that money market fund has that aspect of taxation, while the hybrid does not really have that tax, and its interest rate is always better than the money market fund, currently 12.5% net on a daily compounding. So here you'll have put the same amount, 605,000, and the interest will be 613, and you'll have approximately 1.2 million. So in terms of numbers, this education plan surpasses by almost 200,000 your money market fund. At the same time, it gives you an opportunity to add what we call whole life cover or whole life insurance, that in the event of death, in the event of death or disability, it will add on top of this investment some amount of money, let's say $1 million, and now you'd have a substantial amount of money. That money could be given to your beneficiary, but what I've said is the most key person to write as beneficiary is trust rather than your brothers and sisters, because I've narrated a story of what is currently happening. So I think with that, Martin, you could be having a question, because I believe I've tried as much as possible to highlight
maybe something else I can add.
Yes.
There are those people who probably did not know we have different types of education plans. When walikuwa wamechukua zile maybe kitambo vile, for example, if you decide to exit,
yes,
the options are very harsh.
Yes, the normal endowment plans.
Normal endowment plan.
Yes.
So I think we will do another video highlighting the difference between the endowment plan,
yes,
and the one that we are calling hybrid.
Yes.
Or maybe you can touch on it just a little bit.
Okay, because it's quite wide, we can
do another video
to do another video so that our guys can follow us and discover what they are missing by not knowing this type of plans really exists.
I think the best thing to say is we have different types of education policies.
Yeah.
So do not like put them in one basket just because you have had a bad experience with one of them.
Yes.
So at least tumekuachia hapo ndio you check on our next video.
Yes.
Which will discuss now into details the different education policy plan. I mean policies.
Yes.
So thank you very much. I don't think I have anything to add on, but make sure that you type a question in the comment section if you have any experience, good or bad, with education policies, or maybe you have a different opinion on either money market or education policy. You can leave us a question. We'll be happy to learn from you as well. So thank you very much for watching this video to the end, and I hope I gave you value for your time. And until we see you in the next video, God bless you and bye bye.